This is Alan Bush with ADMIS with the daily financial forecast for Thursday, September 18th. In the stock index futures, we did see some very sharp gains yesterday after the Fed statement, with the Fed becoming very dovish in what they had to say, including Janet Yellen's comments in the press conference following the statement release. Of course, the Fed left rates unchanged at 0 to 25 basis points. But there were some very dovish comments overall, although the Fed said that the U.S. GDP will increase in 2015 at a fairly good rate, that the rate of growth, though, in the following 3 years, 2016, 17, and 18, will be at a slower rate. So overall, the Fed statement was rather dovish, and this took stock index futures to a one-month high. However, since then, we have seen some profit taking coming in. Late yesterday, a lot of the gains were given back and some pressure again today. But overall, a very accommodative and likely to remain accommodative Fed will support stock index futures. Now, moving over to the foreign currencies, the dollar index taking a rather severe tumble yesterday with the dovish statement from the Fed. Also some follow-through weakness in the dollar index this morning for the same reason, as the Asian and European traders get a look at what the Fed had to say. So with a very dovish statement and the dollar index so weak, most other currencies advancing rather sharply yesterday. We continue to believe that the main trend for the dollar index is lower, and interest rate differentials will be the driving force, we believe, to take the dollar index into some new low ground. Now, moving over to the interest rate markets, sharp gains yesterday, of course, with the Fed statement being the dominant influence. Follow-through gains today, especially at the long end. Also, the probability of a rate increase at the October Fed meeting, now only at 14%. And for the December meeting, now dropping quite a bit down to 41%. Our feeling is that the Fed will not be able to raise interest rates anytime soon. In fact, there is some talk that the Fed actually needs to be more accommodative, not more restrictive. And there is more and more commentary that we are hearing in that direction, which I would totally not rule out. So in any event, the Fed is likely to hold off on any near-term rate increase, and that has to be viewed as somewhat of a supportive influence for the credit futures markets. So once again, remember, these are my opinions alone and are not the opinions of ADMIS, and good trading, everyone.